Welcome in this video. Where will XCN coin price go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable formations on the chart is the descending wedge pattern. In technical analysis, such formations are often seen as precursors to bullish moves. This structure typically forms during a downtrend and signals that the market is undergoing a period of consolidation, which may be followed by an upward breakout. The defining characteristic of a descending wedge is that both the upper and lower trend lines slope downward. However, an important detail is that the upper trend line usually has a steeper slope, while the lower trend line is more horizontal. This causes the price to compress into a narrowing range as it moves lower. This phase of compression is often interpreted as a period in which the market is preparing for a bullish breakout. Currently, the price is moving within this wedge structure and is approaching the upper trend line of the narrowing formation. This suggests that buyers may be gradually gaining strength and preparing for a potential breakout to the upside. Particularly, the price rebounding from the lower trend line and heading toward the upper trend line could indicate a shift in market dynamics, where sellers are losing control and buyers are stepping in. Such patterns tend to lead to momentum buildup over time. In other words, the more the price compresses, the stronger the likelihood of an upward breakout. The most critical factor for the descending wedge to give a strong bullish signal is a breakout above the upper trend line. This breakout typically means that buying pressure has become overwhelming and that the market is about to initiate an upward trend. When such a breakout is supported by volume, its impact is significantly more powerful. At the current position, the price is very close to the upper trend line, which could be a sign that a major move is imminent. This represents a very important technical signal for investors to watch closely. Another factor that reinforces the potential for a bullish move is that this formation usually appears at the end of a downtrend. So when the market has been falling for a while and then forms a descending wedge, a breakout to the upside often signals the end of the downtrend. In this sense, the current price structure has a high probability of being a reversal pattern, making the descending wedge a potential opportunity zone for investors. Additionally, the breakout target for this formation can be identified through technical analysis. Typically, the widest distance within the wedge is taken as the target price following an upward breakout. This helps investors with strategic planning and position setting. If the price breaks out and moves toward this target, it can be reassuring not only from a technical perspective, but also in terms of investor psychology. The fact that the price is currently moving within the wedge structure indicates a neutral zone from a technical analysis standpoint. However, this situation is unlikely to persist for long, as consolidations don't last forever. Eventually, the technical structure will make a directional move. In this case, an upward breakout is not only possible, but also a scenario supported by technical evidence. In terms of understanding market dynamics, this structure is not just a graphical formation, but also a reflection of the psychological battle between buyers and sellers. While sellers continue to apply downward pressure, buyers increasingly step in at higher levels, showing resilience. This gradually slows the momentum of the decline, and eventually, buyers take control. At this point, the upper trend line breaks, and the price exits this narrow formation with a strong upward move. This move is often fast, high in volume, and impactful, because investors who have been waiting on the sidelines tend to jump in once they see the breakout, helping to fuel the new trend. But of course, we cannot make decisions based solely on the wedge pattern. Let's take a look at other metrics as well. Stay tuned. One of the most promising formations in chart analysis is the W pattern, which is closely followed by investors as a strong reversal signal. When analyzing the current price structure, it appears that the price has reached the second bottom of this W formation. This technical outlook may signal the early stages of a potential upward move, as W patterns typically emerge after a downtrend and often lead to strong bullish reversals. For a W pattern to form, the price must create two distinct bottoms. In the first bottom, selling pressure is usually strong, but buyers step in and push the price upward. In the second wave, the price declines again, but finds stronger support. This second bottom is the most critical part of the pattern, as many investors look for entry opportunities at this level. Looking at the current chart, the price is precisely at this second bottom, and there is a high likelihood of a rebound from here. Furthermore, an upward breakout from the W formation can signal not just short-term, but also medium and long-term bullish trends. This is because the formation indicates that the downward momentum has ended and buyers are starting to take control. This transition often results in a sharp, high-volume move that breaks through resistance levels. The fact that the price is currently at such a key level, the second bottom, may represent a significant opportunity for investors. W formations also reflect a shift in investor psychology. While the first bottom is marked by despair and panic, the second bottom tends to be characterized by cautious optimism. Investors begin to believe that the price may not fall much further and that it might be a good time to buy at low levels. This psychological shift is one of the strongest forces behind a trend reversal. The current technical setup could be signaling the beginning of such a change. To complete the formation, the price must move strongly upward from the second bottom and then break through the resistance level known as the neckline. This breakout is typically accompanied by an increase in volume, which confirms the strength of the pattern. If the price manages to break this resistance, the expected target is usually the depth of the formation projected upward. This represents a potentially satisfying gain for investors. The reliability of the W pattern has been proven many times historically. Whether in cryptocurrency markets or traditional stock markets, there are numerous examples of this pattern working effectively. Therefore, it is not just a chart formation but also a trustworthy technical analysis tool. Since the price is currently at the second bottom, the risk-reward ratio is among the most favorable from a technical standpoint. As such, any price movement starting from this level could carry important signals that investors should closely monitor. A rebound from this second bottom would both confirm the validity of the pattern and offer strong clues of a potential new trend to investors. Especially if the RSI and other momentum indicators begin to rise along with the price, it will build confidence among market participants and increase buying pressure. This, in turn, would help the price break through resistance levels more easily. Volume analysis is also critical at this stage. If volume increases as the price rises from the second bottom, it suggests that the upward move is healthy and sustainable. Breakouts without volume often fail to hold, whereas those supported by strong volume tend to lead to more robust trends. Therefore, any upcoming bullish move from the current level will be much more reliable if backed by volume. The Bollinger Bands, one of the most important technical indicators on the chart, is about to give an extremely critical signal. Especially in the recent period, the bands have been narrowing, and such narrowing is one of the strongest precursors indicating that the price is preparing for a big move. In technical analysis, this is interpreted as the calm before the storm. This is because such a narrowing of the bands means that the market is tightening and it's time to take a directional decision. This tightness is usually followed by a strong and voluminous price breakout, which can be either up or down. But given the other technical structures and the trend, the probability of an upward move seems quite high. Bollinger Bands are a visual representation of volatility. The logic of this indicator is that the price oscillates between bands with a certain standard deviation around the moving average. The wider the bands, the more volatile the market is. The narrower the bands, the tighter the market becomes, and the lower the volume. But this tightness is not permanent. Each period of tightness results in a boom. We are on the verge of just such a situation right now. The Bollinger Bands have narrowed considerably, which tells us that the price is now preparing for a big breakout. We will watch and see if the narrowing will turn into an explosion. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.